everybody? Today is February 1st, 2021. We made it through January. It was slow, but we made it through. It's January now. Not it's February now, excuse me. Um, yeah, so take your February. Be sure y'all checking out these videos. Be sure y'all are sending your charts in. Because the more you hop on these videos, the more these charts you look at, the faster you are going to understand this. But enough of me talking, let's go and get started. So for everyone who knows, this is the smart money method. Now, the thing that we want to mention at the offset is that there are two types of traders. You have the institutional traders and the retail traders. Now, we're institutional traders, and we know that what happens in Forex is that the market is manipulated. People say it's not manipulated, it's misinformation. The Forex market is manipulated. How this works is that the institutions will set up all these chart patterns, y'all know, head and shoulders, EMA crossovers, to entice retail to buy or sell, and the institutions will then force price to do the opposite, which is why retailers are always saying, I got stopped out. I don't know why I got stopped out. Our job as institutional traders is to identify where the institution is doing their manipulation and ride that move with them. And once you learn that, it's easy. Let me know if that makes sense so far.
Yes, sir. That makes perfect sense.
I'm glad. Who else we got up on? Let's see. What's up, Audrey, Elijah? We got Craig on as usual. Ben going to work. I respect you hopping on. You know, I always love when y'all can take time out during these calls. But yeah, let's get into it. So we know that we just said that price does the opposite of what retail does. And it only makes sense because if Forex were as easy as an EMA crossover, why is not everybody a millionaire? If Forex were as easy as selling on head and shoulders, why is everybody not a millionaire? But they won't tell you that. The recruiters want to fool you into thinking that you can learn this in 5 minutes when it's simply not that easy. But I'm blunt with y'all. It took me 6 minutes. No, it took me 6 months before I was profitable. So think long term with this, but I'm not going to ramble. Let's get back into it. So before I get into the actual confluences, I want to go over market structure with you all because this is something that is often so overlooked, but so crucially important. So the way I look at market structure, every one of the educators at Outcome Reach looks at it a bit differently. And of course, you have Vault and Imperial who are affiliated with Outcome Reach. So what this is called, pretend this is a key level. What does that mean? A key level, in my eyes, is price that was resistance, got broken through, and turned to support. That's a key level. Likewise, it can also be a zone of support that was broken through like this. Zone of support, broken through, turn to resistance. The moment you see it either being support and resistance, being broken through and turn to the other one, that's how you know it's a key level. Now, why is this key level important? Because regardless of if you're buying or selling, there is nothing but retail orders around here. So let's pretend this was support, price broke through it, and turned it to resistance. So if price is coming back up, what would you expect price to do? Or what is retail, 96% of traders expecting price to do? They're expecting price to hit this level and shoot down because that's what retail tells them to do. The banks know the retailers are doing that. So what the banks will do is they will know that retail has sell limits right here with stop losses right here. Other retailers have buy stops right here with stop losses right here. So what the banks will do is they will take price and do this so both of them got stopped out. Because the banks are greedy. Whenever retail gets stopped out, the bank makes money. So before I look for my smart money entries, I'm looking for that market structure. I'm looking for that key level on a higher time frame. Write this down. It needs to be at least the lowest time frame to find a key level is going to be the 4 hour. You can get away with the 1 hour, but really 4 hour. First thing I'm doing before I'm trading is looking for a key level. Now, you come right here, I promise you all, if you just study this dilemma, you will see it so many times. Now, this is just pure, utter market structure. What do you see right here? You see resistance. You see price break through that resistance right here, and retail is expecting to turn to support, which it does. Before it turns to support, it dips down below it, just right here. Because when it dips down below it, the retail got stopped out. Sales stops were activated before price shot up again. You will see this every single time. Let's go back even further. You'll see, look at this. Beautiful, beautiful, beautiful. Look at this right here. You see resistance. It got slammed through. So retail was expecting was for price to come down to this level and shoot up. But what did the banks do? They sent price below that level. They sent price all the way down here before it shot up. And what we discussed earlier, you know the institutions are lining up their orders because around this key level, you will see price going like this, in and out and out. Because the retailers who are buying had buy limits right here, stop losses right here. They got stopped out. Retailers who were selling had sell stops right here and buy stops right here. They got stopped out. That is how you know the institutions are at work. So what do? You see this key level. If you're looking for buys, you are looking for your entry down here. You're not looking for your entry on this key level, because if you do, you're buying with retail. You're looking for the entry below the key level. And those of y'all who already know the smart money method, if you look right here, the 50% of this OC, that was your entry. That easy. But I know people in this YouTube do not know how to find the outcome candle. Here's how you find the outcome candle. So there are 3 confluences. First of all, what did I say I do before I look for any confluences? I look for that key level, because once that key level is broken, I know that's where the entries are going to be. So if I'm looking at this chart right now, I see support, get broken through, turn to resistance. What do you see price doing right here? In, out, in, out. You know that the institutions are loading up their orders. So what are you expecting price to do? Come visit up one more time and tank, because we're looking for sales. It's price in a downtrend, as we see. Now, how do you find your entries? Smart money confluences, there are 3 confluences. Someone give me the first one. Y'all know this.
Liquidity.
Liquidity. That's right, you got it. I'm gonna write this down so y'all can see it. Now, liquidity, in short, is just a really fancy term that I say to make myself sound smart. I'm joking. Liquidity is just what we went over. It is support and resistance. Liquidity, the way I look at it, it can be looked at as many ways. It's magnets. Price gets drawn toward that support and resistance. How I look at it, I look at liquidity as key levels. Notice how price is, it's like a magnet. Price gets stuck to this key level and just kind of sticks to it. That's the first thing you're looking for. That's all it is, liquidity. Liquidity is defined, write this down. Liquidity is defined as the area where retail is holding their orders. Once again, liquidity is defined as the area where retail is holding their orders. And as we just discussed, what are we expecting retail to do? What's going to happen with those orders? The institutions are going to stop them out. And that stop out is called, what is it called? The impulse move. That is the second confluence. Now, the impulse move could be 1 candle or it could be multiple candles. Regardless, all it is the move that breaks liquidity. Now, let's come in. So I'm not sounding abstract. Let's look at it, what's going on in this chart. This key level is liquidity. All right. The impulse move is the move that breaks the liquidity. Look right here. These candles right here that slam through this key level. That is your impulse move. And that brings us to the final confluence. Number 3, the outcome candle. Now, an outcome candle is simply an engulfed candle that follows the last 2 confluences. I'm not going to get into what an engulfed candle looks like. I'm not trying to be a smart ass, but just Google it. It's going to be the engulfed candle before the impulse move. Now, it has to follow all 3 confluences. If it doesn't, it's just an engulfed candle. It has to follow all the confluences to be an outcome candle. What do you see right before this impulse move? You see this engulfed candle. Since it's a sell, watch how easy this is. Sell limit at the bottom, stop loss at the top of the candle. That's literally it. Notice how there's no indicators. I know those of y'all who are new to Imperial. Notice how there's no indicators, no chart patterns. Why? Because those chart patterns and indicators are 99% BS. You don't need to listen to them. That is literally it. So what did price do? Price came up, hit it, and tanked. Now, you know what the best part? What was your risk? 17 pips. Price tanked down 260 pips. You can't lose the risk to reward like that. And what did we say about market structure? You can see it all over again. What did we just go over market structure? This is your key level. What banks will do is they will send price out, down, bam, through both key levels. Stop out people on both sides. What did we see happen right here? I'll mute y'all right quick. This stuff picking up. I'll mute yourself if you want to talk. What do you see right here? You see your key level and price going slam, slam, slam. You caught the entry above the key level and price tanked. It's that easy. All I need is one of these a week and I'm set. Do I trade 200 pairs a week? No, I trade one. Now, you could have got this entry order here. You see the same thing. You see your liquidity right here on the bottom. Likewise, you see a retest down here for the key level. Before that, you see your impulse when it slams through it. And before that, you see your outcome candle right here, the Engulf candle. Price tapped it, shot down. It's that easy. There's no indicators, no chart patterns, nothing. It is that easy. Now, someone asked me a question. Y'all can unmute yourselves and ask questions. Nobody got questions?
Can you run back through it? Can you run over another one? Cause I'm late to the party.
Yeah, I got you, bro. Have I been on a call with you before?
You said what?
Have I been on a call with you before?
I think you have, but it's been a while. So I mean, I know the ins and outs. I just needed like a refresher type.
Bad. We're glad to have you back regardless. Let's see if I can get set up. I saw one over there, but
I got a couple questions actually.
Yeah, go ahead.
But I mean, I understand smart money, but all right, let's say this. Let's say that let's say you spot an outcome candle, right? But you see another one behind it. How can you tell, like, because
Good question. All right. So what he's saying is that if you see two outcome candles right beside each other, how do you know it's the correct one? Is that what you're saying?
Yeah.
Let's find an example. That's an excellent question. I struggle with this for the longest. Let's go to a different pair too. Let's go to UJ. That has some good setups. Now, actually, no. We'll stick with it. No, let's go to NJ. Y'all know who've been on these calls for the past couple weeks. I've been trading NJ for like a while now. This is a phenomenon that you will see. This is the perfect example right here. All right, Ricky, what does this look like to you right here?
that looks like that's the outcome candle, right?
That got blown through.
Right. Oh yeah. It came through and punched down through there.
Now, a mistake people would make is they would buy this outcome candle. Now, it's perfectly valid. Look, you got liquidity on top, you got the impulse from the slims of the liquidity, and you got the outcome candle right below it. But take a step back. Look at the bigger picture. What's down here? That's the one that price went for. And you know why? What did I tell y'all that I look for before I look for entries?
Key level.
Key level? I look for market structure. Yep, and that's how I look at market structure, key level. If I'm looking at this, let's zoom out, look at the bigger picture, y'all. Here's your key level. Remember, key level. Resistance that turn to support, support that turn to resistance. If I'm looking at this, I see triple highs, triple tops, resistance. Get blown through, turn to support. Now, let's leave these lines so I can clear this up for y'all a little bit. what did I tell y'all about what does price do around the key level? Before price shoots up, we know that we're in the uptrend. We can agree that much just by looking at this chart. Price will go through the key level, activate the sell stops down here to trick out the retailers, and then shoot back up so they get stopped out. Price has to dip below the key level before it goes up. If you're buying right here, you're buying with retail. Look right here. If you bought on this outcome candle right here, you will be buying with retail. Because here's your key level, and you'll be buying right there on that key level. You're buying with retail. What do we say price has to do? This has to dip below the key level, which it did. It dipped below it. Came from this outcome candle right here. Does that make sense?
Yeah, that makes sense, but I never learned about, I don't think I learned much about key levels, so.
I know no, lots of y'all didn't. I actually made a video about it. Everyone who's on this call, regardless, go check out Outcome Reach YouTube. It's key level Kylenays. This is how I've always looked at liquidity, but I guess it's my fault. I was not very clear about how liquidity. I just expect y'all to know. I thought it was common sense. So check out that video. It's all gonna make sense. And then come back and reference this. This will be posted on YouTube tonight or tomorrow.
Okay, bet.
All right. What other questions you got? That was a really good question.
Hey, Kylan. So, regarding the key level, right? So now I know it can go either from support turn resistance or resistance turn support. Does it matter? So, like, let's say, like NJ, we know we're in an uptrend. Because we know we're in an uptrend, do you care if it's support or resistance that comes first, or do you look for one of them to come first and then vice versa? You know what I mean?
Nah. I mean, it doesn't really matter which one comes first.
Okay.
Because regardless, you're gonna see both. Like right here, I see key level, I see support, resistance, and right now I see price going and it this key level right now. So now I'm expecting price to get down below this again before it shoots up. And low key, what do I see right here? This is a very possible setup right here. And actually, no, this could be a possible setup because if you look right here, you see support, broke through resistance. So actually, we could see price dip down below it. I did not. I just gave y'all a signal. You're welcome. All right, there's your signal right there. Now, the only way that you mess up with these key levels is if you mark up the wrong key level. That's what's hard about this. You have to learn how to find the right key level. And I mess up that all the time. But sometimes, I mean, the key level, I back tested enough. This is my strategy. It's about 60, 70% effective. So, you know, if it's wrong, I just know, okay, I hit the wrong key level. I'll remember that try so I can get the right key level next time. That's how you mess up with this. So it's just going in, back testing enough to learn how to identify the correct key level.
Bet.
All right, y'all keep it with the questions. Let's get it. Y'all have some really good questions tonight.
Okay, let's say we're looking for a sale. Can you mark that up?
Yeah, I got you. I told y'all these people always come in like 10 minutes to the call. Did I not tell y'all? All right, so a sale. Let's find one that's in a downtrend. Anybody know any pairs in a downtrend right now? Let's see. Seems like everything's trending upward. Okay, that's ranging. Here we go. All right, that was a nice one right here. All right, this was really nice. All right, so what do we see right here? First thing I'm looking for is the key level. Remember, the lowest time frame you're looking for key levels on is the 4-hour. I see resistance. No, that's support. I get those two flipped up all the time. I open this chart. I see support right here. Bring it on over. Still support. Gets broken through, turns to resistance. What do we know about key levels? Before it continues to go down, price is going to do this, as we just went over. What do we see price go to? Remitigation right here. Remitigation is just a re-entry. So if you could have called an entry right here on the open. This one for 50%. Does that make sense?
He even gave another re-entry right there too. Like
Where?
a little bit to the right, right there.
Right here? Yep.
Mm-hmm.
I'm telling y'all, this is easy. I mean, those of y'all who are new, check out how there are no indicators here, none whatsoever.
So if I was to go on the 4 hour on a pair and mark up support all the way through, and it's it's going up and down through the key level, do I just look for the remitigation and then look for outcome candles?
Let me rephrase what you said so I can be sure I'm clear. So you're saying if it's a sale and you see a key level and you see price going through, do you look for remitigation?
Yeah. Do you always look for remitigation?
No, you just look for outcome candle. Now, that's more advanced because, I mean, as y'all get into the course and such, when we relaunch it, you'll see there are more. You can look for outcome candle, you look for remitigation play, you look for a Wyckoff schematic or an efficiency play or just an order block. Those are all different types of entries. Today we went over the smart money entries. That's the outcome candle. Regardless, if you're in a sale, what you're going to see is previous support that was broken through turn to resistance. Retail is expecting price to hit this resistance and shoot down. They have their sale limits right here, stop losses right here. They also have buy stops up here and stop losses down here. So in order to take out both sides of retail, here's your previous support, banks will break down below it, and they will make price shoot up and go in and out the key level and shoot down. So what you are looking for is, if this is your key level, you're looking for an entry right here above it and then a tank, because your outcome candle is going to be above the key level. That way it's stopping up the retailers. Look at this dynamic. Come back to the chart we just looked at. Where the hell did that entry go? Here it is. You see your key level right here. Price came up, shot up above it, and tanked. It's the exact same thing we see right here. Make sense?
Yeah, it makes sense.
Yeah. Now, I know I'm making sense right now, but know that you have to back test this. All y'all going to back test this, because I know when y'all back test it, it's a different story. I remember when I was first learning, it's like, oh, he make it look so clear. You back test it, you're like, whoa, wait a minute.
So when you honestly started switching over from, I don't know if you ever used to trade like retail traders, but
I did.
when you did when you did switch over, like, how did you notice a big difference, huh?
When I started with retail, the dude who got me to Ford scammed me, and he made me pay $50 for a baby pips link. So I actually went all the way through baby pips, and I learned indicators. I know pretty much everything there is to know about every single indicator, chart pattern, etc. And that's good because, first of all, when I switched over, I was like, this is foreign language, and I was being stubborn because, Ford's got that ego thing. And I was like, nah, what I'm doing is right, until, I realized, oh, I'm getting stopped out for a reason. You will see the difference immediately, because if you know retail and then you learn institutions, you will see exactly how you used to trade and why it got stopped out. Now, at first, it's like going from English to Spanish, because it's an entirely different thing. There are no indicators, none of that. It's pretty much the exact opposite of whatever you learn in retail. But once you understand it, you will know exactly why you used to get stopped out. So it's one of the best things you can learn. It's truly going to up your trading game, because these are the 4% of traders who are profitable. Not 96% of traders who have $100 accounts they blow because someone told them they could learn this in a day. Make sense?
Yeah.
Hey, Kylan, can you use the key levels for scalping? I know you don't really scalp too much, but like, is it like possible?
That's a good question. It is possible, but y'all know how I feel about scalping. Whenever you do that, you want to find a key level on the hour. Let's see if I can find y'all a nice example. Let's do GA. All right, so this is possible, but I don't like it. What you can do is you can find the key level on the 1 hour time frame. See how it's not even clean anymore?
Yeah.
Okay, here's one right here. Let's go to replay mode so I don't lose it. All right. So you find your key level on the 1 hour time frame. This is how you scalp with it. From there, you go down to the lower time frame, 30 minutes, and even 15 minutes, and that's like where you find your entries. So,
I bet.
Yeah, it's not.
Sometimes I don't like the super big stop losses.
I'm sorry, some car just drove by.
Nah, that's cool. I said sometimes I don't like the super big stop losses, so I like to like find my entries on like the 30, 15 sometimes, you know.
Oh, it's definitely possible. You can see a play right here. Saw Price come up through it right there. That was a little quick scalp.
Okay.
I don't like it. The non probable. I mean, that's just my trading style, though. I'm a 4-hour type of guy. I usually tell my entries in 30-minute, but I'm a 4-hour type of guy. So, all right, keep it up with the questions. Y'all are really good tonight. What's up, Tristan?
Hey, Kylan, I have a question. Why do you find your key levels on the 4-hour as your lowest time frame as opposed to like the hour?
Because the institutions are looking at the big time frames. Why? Because the big time frames have what Craig said he wants to avoid: super large stop losses. Remember that when retail gets stopped out, institutions make money. Institutions are looking for those really large stop losses so they can make really large amounts of money. You're not going to find that on 30-minute time frame because institutions aren't looking there. They don't care about little 5-pip stop losses. They want the 20, 30-pip stop losses. So you're going to see how that on the daily, the 4-hour, the weekly, the monthly, and sometimes the 1-hour. And I say sometimes because sometimes. Make sense?
Gotcha. Yeah, that makes a lot of sense. Thank you.
Yeah, for sure. Keep them up. Let's hear them. Y'all can ask me about this. Y'all can ask me about Forex in general.
Okay, so
All right.
oh no, go ahead, bro. My bad.
All right, my bad. All right, so let's see. I was asking about it earlier in the chat if I could do this with HFX, but I know I just heard the other guy say that you didn't like scalping, but I was told that you could use it with HFX too, like because it really deals with like small minute charts.
Wait,
Like
use it with what?
HFX.
With HFX.
Yeah.
Everything you learn here, you could use in any market.
What is that? A different market? What's HFX? I'm just being slow.
Binary options.
HFX is like options, except like
it's binary
you got like
options.
30 seconds, minute, 2 minutes, 3 minutes.
3 minutes, 1 hour.
No, Tristan said it right. This can be used with Forex, stocks, options, everything. It's very versatile. You can use this for anything. Cryptos. Honestly, y'all want to see why? Let me show y'all what XRP shot up. And this is actually, y'all pay attention to this. This is actually a really nice example. First of all, we've been holding XRP since November. Those of y'all who have been in our reach. So y'all have been making bank with us.
That monthly OC, I seen
Look at it, y'all. Look at how versatile this is. Look how price hit that outcome candle and shot up. Now, yesterday, for the first time in a while, it went up to 74 cents. That's the fastest $1,000 I've ever made. But I can't take it out because of a lawsuit. Oops. It went up to 74 cents. And there was a bunch of hype from a bunch of people saying, y'all, okay, this is going to happen. Everyone's going to buy tomorrow at the same time at 8:30, and we're going to force the price to go up. You know what the price did? It shot down. Why? Because the masses were buying, so the institutions pushed price down. The key to this game, see what everyone else is doing, do the opposite. See what everyone else is doing, do the opposite. If everyone is saying to buy a stock, you better look at that very carefully. If anyone's saying buy, please, by the way, if any of y'all bought Dogecoin, we need to have a conversation. Hey, bro, I really hope none of y'all bought this coin.
Bro, I've been seeing
we
that
know you made some bank off of it, but Tristan must be with us for a while. So Tristan got a pass.
Get him,
get him. Oh my God. But yeah, y'all keep asking questions. What's up?
After you make your trades, do you just read your chart off the 4-hour?
What do you mean?
So after like you find your entry point, are you after that just reading your candlesticks like continuously off of your 4-hour chart, like trying to see like where price is going to hit, like on your fib, for example? Or
like
do you
take profits and such?
Yeah. Or do you scale down to your lower time frame, like the hour, to read it to see?
I didn't even go over that. Take profits I set before I even hit the trade. And let me go back to NJ. That was a perfect example. Y'all tired of this NJ trade, I know, but I'm gonna keep showing it to y'all. Before I even set the trade, before anybody sets the trade, they need to have a take profit in mind. So before I took this trade right here, my take profit was going to be up here. Why? Because it's equal high. That's what you do. You take your take profit on liquidity. Now I had a re-entry right here, but you see that got blown through. Why? It went for a different key level. And I mean, that happens, so it's no big deal. Janisha said, how do you find your point of entry institutional candles? That's pretty much everything we just went over. That's the 3 smart money confluences: liquidity, impulse move, outcome candle. That's it. So say what?
Going back to what I was talking about though, with the binary option. So if I was to, find the outcome candle on the 5 minute, is it a good idea to do top down analysis?
Hit up Tristan for binary options, because I actually don't personally trade those. I don't want to give you wrong information. From my understanding, from people who do them, it's the exact same thing, the exact same method, everything. But hit up Tristan; he can give you the step-by-step with binary. I don't want to give you wrong information. What other questions?
My bad. Somebody called me.
Are you good? Tristan, you got any questions or comments? I mean, you probably don't, but
What binary? It's kind of risky trading those 5 minute time frames, because at the same time, like institutions aren't, like Kylan said, institutions aren't really targeting those smaller time frames. So you want to look for the higher ones to find the actual impulse type of move, because you could just get it easily engulfing in binary, and that won't actually be a real move that the banks took, and they're gonna retrace to.
exactly.
So I was just looking at like the higher time frame, and then
They got 30 minutes in an hour.
Yeah, so if you're, I would analyze on that, find your outcome candle, and then go down to like the 5 minute time frames to see like a type of schematic or another type of order block, and then take that trade.
Right.
So you always want to have like a top down analysis, and then use the smaller time frames for your entry. You can still trade off binary that way also.
All right. Janisha said, what is the difference between an outcome candle? Let me make sure I read that right. What is the difference between an outcome candle versus an institutional candle? And outcome candle is a type of institutional candle. There are many types. You have your outcome candles and you have order blocks. That's more advanced stuff. So once you get to the course, yeah, I don't want to go over that on this call. It's going to confuse people, but yeah. And speaking of the course, those of y'all who know, I own Imperial Forex. I'm active in Vault Forex, and I'm an educator for Outcome Reach Forex. So those of y'all know we have a course. It's going to be relaunched. We're putting so much material in there for y'all. It's going to be relaunched at early March. So those of y'all need to, I'm going to tell you right now, it's going to be beginner course is like 100 a month, and intermediate is 150 a month in 2 months. And advanced is 200 a month for 2 months. And then I believe we're gonna have a bundle package in which you can pay like 600 or 900, something like that, for the entire thing. But that's what I went through. That's how I learned what I learned, and now I'm sharing that knowledge with you. Yeah, we're giving you a lot of knowledge right here in the free group, but the course, it's more organized. You can have unlimited one-on-ones with us. You get access to our signals. There's so much value that's gonna come out of that. So whenever it relaunches, I highly recommend y'all start saving up for that now, because it's one of the best investments you will make. It's truly going to turn your trading game around. So just keep that in mind for the relaunch.
Isn't that like March the 1st?
Don't quote me on it. I think it's March the 4th. Regardless,
that's a long time away.
Yeah, we're gonna get y'all got some decent time, but that's because we're trying to be sure that it's top notch. We did a relaunch earlier. I'm all about being transparent with y'all. The relaunch was awful because the website that we were using was terrible. Like it was a waste. So that's why we, as educators, decided, we're going to go through, we're going to scrap the website, move back to Teachable. We're going to be sure that all the info is up to date, it's up to standard, and that y'all are getting the best value for your buck. So thank you for y'all patience. That's why it's taking so long, but when it's out, I highly recommend. And it's the one-on-ones that I really, even y'all current course students, it's the one-on-ones that are going to push y'all to the next level. Please do not feel like you're bothering us. And even if you're not in the course, if you have a question, send it in the group chat. don't feel like you're bothering us. Those group chats are there to help y'all learn. I would not have a group chat if I didn't want to teach y'all. So do not feel like you're bothering me. Send your charts, ask your questions, all that good stuff.
Hey, Kylan,
What's up?
you don't remember the part where I said I was the CEO of Imperial and Vault FX, bro?
Say what?
You don't remember the part where I said I was the CEO of Imperial and Vault FX, bro?
I told Craig he was CEO. I told you he was CEO. He said it.
He out here capping to y'all folks. It's like, nah, that's my guy, man.
But right after this calls it in like 2 minutes. We have the Outcome Reach podcast. Hop on. I'm about to give y'all some psychology stuff. Those of y'all who know me know I am a political science major with a history minor, but I also heavily am involved with some psychology stuff. So I use that related to forest, related to concrete. Join up the Outcome Reach call. It's going to be a podcast. I will send y'all the link as soon as this call drops. But before that, what kind of questions do y'all have?
Dang, what was I about to ask? I was about to. God, I just
so many times, bro.
Oh yeah, so on YouTube, because I'm really trying to get back, get back into this and trying to get as close as I can to mastering it. But on YouTube, do y'all have like any saved playlist that is in order, or
in order? No, that's the big thing about the course, because the course is in order right now. It's kind of in spurts, but you can go to Outcome Reach. I know y'all see this weird shit on my YouTube. That's because I'm a history. That's loud. Go to videos. If you're trying to find some order, just start at the beginning and go up. You see a lot of Smart Money Mondays here. This key level video, watch it. That's crucial. Watch the key level video. And Dylan Cotter on YouTube. Be sure y'all like and subscribe. But this call's in any second now. Hope y'all found value. Hit us if y'all have any questions, and I will see y'all in a second on the podcast.
Good call, Brody.
Appreciate
you, bro.
How do I end this? Oh, wait, it's down here.